December 12th trade alert, collecting another $366 from our SPY ETF position today. Keep watching for today's new trade alert, but first a review of our portfolio. Cryptocurrencies are showing signs of life today, bouncing up 2% over the past 24 hours. While positive on the day, they still remain in dangerous price ranges for miners, which in turn could cause pain for Goliath mining hardware developer Bitmain, and also for altcoins running out of funding with no income sources. Based on a $250,000 portfolio, here's how I have my assets allocated currently. Target stock percentage is 70%, which we use to generate consistent returns selling covered calls. Target cash level, 10%, and this is our rainy day fund. Target gold position to protect against inflation is 10%, and the target cryptocurrency position is also 10%, which also serves as an inflationary protection, but also as an opportunity for growth, as cryptocurrencies have outperformed all markets in the past 10 years. Currently, I'm overweight in stocks by $7,000, cash $462, gold $841, while I'm light in cryptocurrencies by $8,368. I'm waiting a few more weeks to rebalance. All in all, I believe that Bitcoin has a potential to dip back towards 3,000 due to the prices remaining below the profitable range, which is above 5,000. Either way, I do intend to rebalance the cryptocurrency portfolio no later than January 15th. Here's what the total portfolio outlook looks like right now. You can see the portfolio is currently showing a loss of $6,272, but just on Monday, before we started using the option and stock strategy to generate consistent returns, we were down considerably more. So we're using the options and stocks to replenish our cryptocurrency portfolio, which is currently the only asset showing a loss. Most of our money is in ETFs that track entire countries' top corporations. Currently, the top countries we're tracking are the United States, Japan, Germany, the UK, Brazil, China, and India. While the US market has been relatively strong over the past year, the other markets are down considerably from when we entered. So those are positioned to potentially show great returns in 2019, even without writing all these covered calls. If you look over to the right, you can see the target percentage. Currently, 28% of our portfolio targets the SPY ETF, 7% on the EWJ, 5% on the EWG, 3.8% on the EWU, 3% on the EWZ, 17.8% on China's MCHI, and 3.8% on India's INDA. Meanwhile, to have exposure to gold, we use the GLD ETF. This week, in the past 2 days, we've brought in $1,868 of income on Monday, $500 of income on Tuesday, and today I'm collecting an extra $366, which will all be used towards building back my 10% allocation in cryptocurrencies in the near future. Monday, we bought 274 shares of the SPY ETF and wrote a covered call, bringing in $624. We also did that for our other ETFs we entered into. The SPY jumped intraday, assigning the stock to the other party in our call option contracts. We got an extra bonus of $100 from being assigned. All in all, this put to work around $54,000 of our total portfolio capital for a return of 1.3% in a 24-hour period. If you can compound just a 1.3% profit once a week, 52 weeks a year, that's $54,000 turning into $105,702 in only a year if you reinvest all the profits. Now, I'm not saying that's going to happen. Right now, volatility is very high, which makes this strategy very profitable. And in fact, we will not be writing option premium when volatility is low, and rather be investing in option premium to protect our portfolio and also give us opportunity for exponential growth, betting that the market can continue to go higher into 2019. Now, by Tuesday morning, we were sitting on our cash again instead of the SPY shares. So we did the opposite trade as Monday and wrote a put option contract designed to purchase our 200 shares of SPY back at a discount. We took in $269 times 2 contracts representing 200 shares of the SPY for $538 by writing an in-the-money put option. And by 2 p.m. Eastern yesterday, the SPY ETF fell from 267.75 all the way to a low of 262.50, bounced back to 266, then closed the day out at 264. Talk about a wild ride. And here's an image of the last Tuesday and Monday. And just like on Monday, our gambler who bought our put option probably made a good profit. But most of the time they won't. Most of the time the gamblers are betting on short-term moves and it doesn't happen. Meanwhile, we collect the cash. In this case, everybody is happy. We made a great return and so did they. For our strategy, this is all very good. The more volatility and times we are assigned, the more opportunity we have to reloan our stocks out to the casino for consistent cash. While volatility remains high, we want to write as much option premium as we can. And you can see with the VIX ETF, we're at relatively high levels of volatility. And in fact, the last time it was this high was in February of 2017. I suspect within the next 4 to 8 weeks, volatility will dramatically subside, which is when we will take advantage of buying option premium for protection at relatively much lower prices than you can purchase it for right now. Let's review all the trades we placed in order to facilitate this week's trading. This screenshot shows the buying and selling of the SPY ETF, which has now been assigned to us twice this week, once to sell and once to buy 200 shares. As well, it also shows the initial trades we put on to buy the other ETFs which we were selling covered calls against. Now this is one half of the strategy. In a moment, we will be looking at the option writing trade alerts. So the next 2 trades have been cut in half because it's very wide and wouldn't fit on a single screen. So here's the first half showing the open option writing short open pending positions. So prior to entering into today's trade alert, the SPY ETF was filled. We owned the shares, but we had no covered call written. Down below, we can see the 2 closed contracts against the SPY, which are now completed, and the remainder of our covered calls on the other ETFs are still open. And so if you look over here to the right, I've included the ETF again. Down here in the net credit, that's the amount of capital or credit we received from writing those options, $622 on Monday for the SPY, $536 on Tuesday. We are entering into a new trade today, which will go into this empty spot up here. And meanwhile, we're just letting the other options collect their premium every day. Currently, the INDA, India Country ETF, and the MCHI, China Country ETF positions are nearing assignment. in which case we'd write a put option contract in order to get back into the position at a discount. The rest are on track to continue collecting their daily premium value with no action. Today's new trade alert: to collect $366 from the SPY ETF. Today's trade alert captures $366, lending our 200 shares of the SPY ETF to the quote-unquote casino for a gambler to bet on its movement by this Friday. They have until the close of this Friday, that's only about 16 hours of live trading time, for a potential 0.0069% return on our capital. The U.S. markets are up today on positive China-USA trade headlines. The two key points were progress towards easing the steep tariffs China imposed on U.S. vehicle imports this year, lifting car maker stocks across the globe back to where they formerly were, indicating an ease in trading tensions and progress towards agreement. And number two, President Trump says he's willing to meet China's leader Xi again as he hailed the country for resuming soybean purchases. President Trump said he would also intervene in the case of the Chinese CFO who is currently accused of fraud. And to review the trade alert one more time, we are selling to open 2 SPY contracts expiring on December 4th, 2018 at a strike price of $268. So we agree to sell our shares for $268, plus we get to collect the $183 per 100 shares we own. So if the SPY jumps above $270 by this Friday, most likely we'll get assigned. We'll be very happy with our return, and the person who bought this from us will also be happy. More than likely this won't happen. The person buying this will lose their complete investment and will walk away with a very nice, consistent return. Tomorrow's update will include how I've inputted this into our spreadsheet, and unless we're assigned again, there will be no action to take in the portfolio for the rest of the week. Monday will be the next big income day for the portfolio. So thanks for your time, and look for a new video tomorrow morning.